Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce.
All right. Happy Monday.
Yes, sir. Happy Monday to you.
Hey, listen, I don't know about you, but in the last month or so, I have been working with a lot of people that just don't fit in to any average box when it comes to qualifying for a mortgage. Like they don't qualify for FHA, VA, conventional, investor loans. We even looked at DSCRs and bank statement programs. I've got, I think, 5 people just this month alone that are fitting into a category of non-QM or non-agency type programs that just don't fit. And so we're having to go out and find private investors or private money or non-institutional money to help these folks with. And I think, and most of them, of course, are going to all be self-employed people or either foreign buyers that are seeking to buy here.
Sure. Yeah, I mean, I deal with that a lot. As you know, I deal with a lot of investors. I'm an investor myself. I sometimes flip some properties. I help other investors. I've got money that I lend out as a private lender on occasion. I don't go through the underwriting that you go through, though, right? So mine is more about knowing the person on the other side, looking at the deal, analyzing the deal, making sure there's enough skin in the game and that I have very little risk, right?
That's right. And most of the time, the skin in the game is going to be the equity in the property, because if you're not really verifying income, then they don't have credit built up in the United States, and in many cases, then what do you have? You only have collateral. So collateral is the only safety net that you have, right?
That's right. Yeah. So, one of the things that I do, and we've talked about this concept a lot, but one of the things that I do is when I lend out my money, I have the person that is buying the property buy it in a trust, and I'm on the trust documents. And should they fail to do what they're supposed to do, whether it's make a payment on time or hit certain milestones in the construction project, I actually have the ability to immediately take over the project and kick them out of it.
That's good. That's very good.
And so that's how I protect myself, right? And I write that in my contract. But you've got to work a slightly differently thing. So why don't you tell me about how your private money concept works?
Yeah, everybody's different. So if they don't fit into a DSCR, because a DSCR, sorry, there's somebody calling in from the station. If they don't fit into a DSCR, a debt service coverage ratio,
yep.
And then you still have, because you still have to have decent credit. You have to have a good down payment, and you have to have a business, or you have to close it in your own personal name. Well, some people don't fit into that. They just don't. Or the property can't produce the rent to be able to offset the payment. So, and then we may look at a bank statement program. Are you self-employed? Do you have the credit? Well, if they don't have the credit for that, or their bank statements don't show the income coming in, then that's off the table as well. So then they didn't qualify for conventional. They didn't qualify for what we call traditional non-QM quality mortgage. So now we have to go into the private sector and see if we can find financing. And so you and I both deal with a lot of investors that are willing to lend non-traditional people that want to buy or refinance money that are still a good risk, but don't fit into the box, right?
Correct.
So that would be either a private individual loaning money. I've done it out of my own IRA, just like you have, or we go to companies that pool investors like you and I together and then lend money to people. And each one of those investors may have a different flavor for the type of transactions they want. One of them, like, he's at 40% down and 11.99% and no questions asked, right? You got the cash to close, you got the business. As long as the property appraises and they love the property, they're good to go. Where others may go, well, I'll do 20% down and I'm going to verify your bank statements, or I'm going to verify your credit, and some of them don't. So it's all different, but not everybody, Tom, fits into a box. So you got to find a box that they might fit into.
Yeah, absolutely. Absolutely.
But
Yeah, as a
one
matter of
thing
fact,
for sure,
I'm working with one right now where we're gonna probably end up refinancing 5 properties to buy one.
right?
And that one's gonna get a little hairy.
Well,
And it's short term because we want to do a transaction where we sell them all and buy the other property, right? But we can't do it all at once, and there's some tax implications and all that stuff, right? So that's where private money
absolutely.
usually becomes a lot more flexible than your typical bank loans.
Absolutely. Absolutely. And there's generally, if keep in mind, if you're thinking about private hard money because you know that it's the right way to buy, you should be buying, but you just don't fit into a normal box, you're always going to need down payment. In other words, you're not going to get 100% financing unless you have a ongoing relationship with an investor that you've done business with before. So private investors that are accustomed to flipping may have relationships and more or less partnerships with the investor, but the typical person's not going to have that. So you're going to need to put down 20 to 40% to put down. Credit may not be even considered. It might be considered depending on the terms of the loan. But right now, I've got a client they're yachties. He's a captain and she's a bosun in yachts down in the Virgin Islands. He's Canadian, she's American. They don't file any tax returns. He doesn't have a permit to work in the United States, but they want to buy a house here. So how do we do that? We get private
Right.
money together. Then I've got a
Gotcha.
guy that bought 2 brand new big businesses like franchise businesses, but he's owned them less than a year. He's making gobs of money, but he can't provide the tax returns for 2 years history to show he's
Sure.
had the business. So he doesn't fall in. So I'm doing a construction loan on $1 million house for him. And then I've got another Canadian that's buying a condominium that the condo doesn't comply with any condo docs. Like you couldn't
Sure.
do
Yep.
it. It's a beach condo. He's Canadian, but he's got the money to put down. And a lot of these foreign national loans or these DSCRs, you have to own a primary already to get a non-owner occupied property like that. Well, these guys don't own a property. They sold
Right.
their properties in Canada and they're all living here and they want to buy. So everyone falls into a different category, and these are each treated differently under their own criteria, their own.
Now, Bruce, I know that, with flexibility comes cost, right? So, talking today, and again, talking average interest rates, not specific interest rates for a person. If I'm going to go get a property today, a primary residence, I can expect to pay somewhere between probably 6 and 8%, right?
Yep,
Give or
well,
take around
you mean
there
on a conventional loan?
on a conventional
On a
loan. If I'm
conventional,
just,
yeah,
I've
somewhere
got
between
income,
six.
I'm putting a down payment, all those kind of things, right?
Yeah, your average will be say 6.75% today
Sure.
would
And,
be an
and that'll
average.
change
Okay?
tomorrow and whatever, right?
That's
So, but
owner
if I'm going
occupied.
for, say again, owner
That's
occupied,
owner
yeah.
occupied.
So if I'm
So
going
then in
for an investment property, I'm going to pay what?
maybe 7.25% to 8%,
Okay,
depending on score and down payment on a conventional loan.
that's still conventional, right? So
That's still
now if I
conventional.
say, well, if I don't qualify conventionally for some reason or another, right? Then you're going to look to a DSCR, right? You
Or a
said that
bank
earlier,
statement loan
debt
grant. Bank
service
state,
coverage ratio, right?
right,
DSCR.
right.
All
Bank
right, and
statement's
so
going to be a little better. I may look in that direction first.
okay,
And then you have 12 month and 24 months. So a 24-month bank statement means I've averaged 24 months of bank statements and they're not declining and the rate might be a little better. Then if you don't, and I can only look at 12 months bank statements, it may be a little bit higher. So maybe a quarter to a half a point higher in interest rate. Then that doesn't work. So we look at DSCRs, and then debt service coverage ratio might be a little bit higher again. If that doesn't work, then we're going to private money. Private money typically is going to be between, say, 10.99 to 14.99%. And then you've got private money investing in your loan, and they want collateral.
right.
I hear you got quite some action going on over there.
Yeah, I'm sure somebody's at my front door or something. So,
Yeah.
Hey, we went pretty deep in that. Hopefully somebody learned something there. Everybody thinks investors have it easy and it's easy money and all that kind of stuff. When we get into projects, it costs money, right?
Yeah.
And that's why time is money, and if you're in an investment property and you're trying to flip it, let's say, right, or get it to be income producing, you've got to do it quick because
Yes, you do.
you're paying a lot. You borrow $100,000 and you're paying $12,000 a year to hold that money.
That's right.
That's
right.
a lot. That's
So you need
$100,000. $100,000 is nothing.
Well, you should always treat a DSCR or a bank statement loan on a temporary basis, unless, let's just say you're self-employed. You don't plan on reporting all your income because it costs you a fortune in taxes. I'll give you an example. I had a client just recently that they made 500 grand a year, but they reported less than 100,000 in taxes. So he was saving 100,000, actually 120,000 in tax consequences because his CPA could write off all these expenses. Now,
and I want to say that, by the way, that guy's doing that legally. He's not hiding money. He's writing off expenses.
Of course he's doing it legally, but he's still saving $125,000 a year in tax consequences, where on a $500,000 purchase price, it's costing him about $30,000 or more in interest than it would on a conventional loan. Well, he's like, Bruce, I'm still ahead of the game by almost 100 grand. So
sure.
I don't have a problem in paying a higher interest on my loan because I'm saving money in my taxes. So, it's not the interest rate, it's the rate of return. And he looked at the rate of return as being far greater on a DSCR or a bank statement program than he did on reporting that much in taxes, paying that much in taxes.
Sure.
And
absolutely.
Then, and he just found it to be easier. So, everybody is on their own merit. We look at each one of these individually, but usually if you've got some money to put down, there's generally going to be a way we can help you get into a loan.
Gotcha. Very good. Well, yeah, I mean, it's, a lot of people don't think of going to a mortgage guy for a investment property. So definitely got to rethink that. If you're thinking about buying an investment property, you don't have to go the expensive route. You can go
anything to do with residential real estate. You can call me. I've got the product for you. Anything from construction, renovation, reverse mortgages, home equity line of credit, all your agency, FHA, VA, USDA, and everything in between.
Wouldn't it be great if the mortgage industry was just a little bit simpler?
Well, you know what? Yeah, I don't believe that anything is getting simpler as time goes on, right? I mean, it used to be when I first got it started, a loan application was 1 page and you needed about 12 pages of documents from a client. Now they're 85 pages and you got to have 85 things from a client. So and that's all litigious. That's because somebody got sued or somebody screwed somebody along the way, and that's the way business got.
Absolutely. Well, Bruce, thanks so much for all this information, man. Hopefully this helps some of our investor friends out there. And,
absolutely.
It's going to be a great year this year. I can feel it already, even with the chilly
100%.
weather.
And if you are a real estate agent or you are somebody looking to invest in real estate and you don't fit into the box or you have clients, call Tom, call me. We're not only interested in helping you, we may be interested in investing. You never can tell.
Absolutely. Bruce, you make it a great week, my friend.
Do the same. All right.